Okay, hello everyone. Why don't we start with introductions from this group? How many mics do we have?
We got 3, I think.
Sure. My name is Josh Nussbaum. I'm a partner at a VC firm based in New York called Compound. We're a seed stage fund, very much thesis driven. So over a given period of 3 to 5 years, we may invest in only 3 categories. Small team, very active in the crypto sector, initially dating back to about 2013, 2014, but most active over the last 2.5 years.
Hey everyone, my name is Milan. I'm with Alphanode Capital. We're based in London and Los Angeles. We focus on seed and Series A investment in the crypto space, and also we structure traditional products that give investors exposure to crypto.
Hey everyone, Richard Dulude, one of the co-founders of Underscore VC. Was actually a HBS grad here, and then right after started Underscore. Just closed our second fund, which is $140 million, actively investing at the very earliest stages. So think one individual founder with an idea all the way through Series B. So that's kind of us in a nutshell. I'll hand it to Jeff.
Hi, I'm Jeff Fagnan, founding partner at Accomplice. Accomplice has been the most active investor in New England for 5 years straight. We take really long-term patient capital bets. And when I say long-term, 10, 12 years, our fund life is 15 years. We've been involved in projects Carbon Black, Veracode, DraftKings, PillPack since day one. And we treat crypto exactly the same. Foundational, long-term, very patient capital.
Yeah, and Jeff was actually my investor at my startup before joining Wing, and he's not only a great investor, but a great person. So why don't we start with how you would characterize your firm's approach to investing in crypto? I'd love to understand what the strategy is and tactically how you're going about it.
Sure. So we look at investing in crypto very similarly to the way we look at investing in early stage companies. Even if we're investing in something that at some point will convert to a token, we look at it over a 10-year time horizon with the assumption that it's early, not paying attention to prices, with no even discussion about selling before that period of time. We also participate on these networks. We're live in the transcoder set on LivePeer, for example, which we'd invested in before that. And so from that perspective, it works very similarly to our early stage investments. I think the biggest difference is just in the way that we work with some of the projects more so than companies that are building infrastructure or applications, whereas it's a very different sort of experience. There's still teams that need help with the same things like hiring, recruiting, PR, marketing, but instead of being like a founder of a company that is trying to kind of dominate a market in the sort of Travis from Uber sense, for example, they're trying to basically shepherd a community because it's all open source and anybody can go and fork that protocol. And so helping them initially on the supply side by participating in the networks, as well as just learning from working with multiple teams about community management and getting the right people and developers kind of interested in building on what they're working on.
Yeah, so our approach is pretty similar. We take a really long-term approach, long only, and we really want to build very close relationships with the founders and the teams. What we believe is that being a VC is pretty much the same as being a crypto VC. You definitely want to add value, not to only de-risk the investment, but also to essentially advance the ecosystem and the company. So the way we do this is by adding strategic value through introductions to our pool of engineering talent, and strategic investors later on and potential business partnerships.
So Underscore, we actually carved out in our first fund the ability to take token positions. So we actually do take direct token positions as well as equity positions, and we're able to do that relatively early. Generally, we're very long-oriented. We are venture investors starting from the early stage and helping build teams and realize the opportunity in the market. Categorically, that means we're actively involved with the teams, and while there's no board seats or anything like that, we generally like to be in a pretty strong advisory capacity with them.
Yeah, I think for us, it's a lot of the same. It's a patient capital approach. It's getting in very early, usually with an extremely technical team. We've been pretty focused on base layer protocol when we look at our investing in crypto. And I think it's just because that's the spaces that we've been most familiar with when it comes to, the regular internet 1.0 or 2.0. We've done a lot of cybersecurity. We've done a lot of, kind of big data and data analytics. We've done everything from authentication, identity, things that we're very passionate about. And we see a lot of the entrepreneurs recycling out and doing things in crypto. And the only change I think we made to it is we put a dedicated group, a dedicated team with Ash, Rob, and David on this, as we did not think that we could dabble. We did not think that we could have people that would just be generalists that would dabble in this. And I think you're going to actually see this in venture overall, that you'll see more specialization. It's hard to be in healthcare IT unless you know it. And I think that this is very much the same. You better understand everything that's moving. It's so dynamic, and you better understand exactly what's going on right now, because it will impact your investment decision, even if you are taking a 10 to 15-year view.
So what are the exciting investable opportunities within crypto? I mean, some funds are just buying a little Bitcoin. Some funds have made 50 to 75 investments in the space. So I'd love to hear you guys talk about, what are the good business models to be investing in crypto? Maybe we've seen some of them today. Maybe we haven't seen all of them yet.
Yes, I think in some ways I can really only share my opinion at this point. The best business models have been mostly exchanges and investment infrastructure to date, as well as the underlying currencies themselves, specifically Bitcoin, for example. Beyond that, I sort of believe that applications are going to be created on certain protocols after a period of time when things stabilize a little bit and it's easier to use. And I think that as a result, when you see applications hooking into multiple protocols hooking into each other, so on and so forth, it becomes very hard to then compete on brand and customer experience. And so you'll be able to charge fees on top of that. I think there's still a threshold with how high you can go before somebody will go through all of that trouble. But I do think that business model kind of will exist in the future. I think beyond that, investing in protocols that, for example, take advantage of when distributed supply can create more value than all of the issues that are created with using a decentralized network. I think that those protocols, for example, once you build at the supply side, could build businesses on top in sort of the Red Hat sense, for example.
Yeah, I totally agree. So I think exchanges are super, super interesting. We look at quite a lot of exchanges, especially from outside of the US, just because we believe that, especially markets like Thailand or somewhere Southeast Asia are going to have a great potential, especially now that regulators are opening up there. We also really look at mining and chipset manufacturers, just because it's, especially on the seed and Series A side, you don't really have the token economics there, and it's fairly easy to evaluate and fairly easy to add value to. What I'm really, really excited about this year and hopefully in the next couple of years is the intersection of music, entertainment, and blockchain, just because I think micropayments are going to be really important in that space. And yeah, that's pretty much our stance.
Yeah, I think there's a lot, the interesting part is there's a lot of interesting investment apertures you could take. Ones that we think about generally from a business model perspective are truly open businesses. Interesting categorically, you have a entirely new business model around incentives, network schemes, and others, and we actually find that really, really interesting as something beyond SaaS, which has been the thing that dominated business models for the recent past. But you also see people doing commercialization on top of open source projects, so you can think of that in much more of a traditional SaaS, but they have kind of this community component, giving back to that community in a very important way as probably a leading contributor. And outside of that, there's other business models like selling hardware. We think we're in a very much an infrastructure build-out period, whether that's mining, generalized mining, custodial solutions, and actually that's where we've been investing a lot of our capital to date and key infrastructure, as well as highly profitable areas like exchanges, non-custodial exchanges as well.
I think we're way too early to focus on business models. And I think every investment we've made so far, I think if we focused on a business model, we would have declined to invest. From sitting with, Mant and Leonid from Swirls, which is Hashgraph, and hearing how they wanted to kind of build something out, there was no business model. There was just an instinct on how to build some foundational tech and what the impact could be. And I think what Richard said, a lot of people are thinking about how to build better software and kind of an open forum, open world type versus kind of a closed system. And we think that's very appealing. We look at how people are thinking about kind of identity and not compromising people with privacy and things like this. They're not business models as much as they're foundational theses that should, kind of really kind of change how we look and how we operate the web, how we communicate with each other, how businesses interact. We're not focused on business models at this point.
So in startup investing, one of the most important characteristics is timing. There was a great study put out by Stanford that said, if Airbnb and Uber, they started in 2010 when the economy was not doing so well and people are more willing to let someone in their home or someone in their car. I think that's very true with crypto investing, even though it's very long term. Timing is a bit important of when you're entering and when you're starting to build a reputation in the space. So as you guys look at where we are now, what are some catalysts that could either drive mainstream adoption or kind of bring the markets to a higher place than they are today?
Yeah, I think we're starting to see the early signs as it relates to just the growth of the Lightning Network, for example, or the growth of Maker, the protocol, and DAI. I think that you see seeds starting to be planted and a lot of smart people working on those things and trying to improve user experiences so that they can get into the hands of the average person who doesn't understand private keys and all of these things and the complexity that goes along with it. And so I think that those trends are what's going to drive sort of the next wave of innovation and bull run, although don't like to focus on that specifically.
Yeah, I would say, at the end of the day, it comes down to utility and use, right? So utility being actually it's helpful, it's creating value where there wasn't before, and the other being actual use. I think that some of the challenges right now are it's really hard to interact with blockchains. I mean, it truly is, and I don't think installing a browser plugin like MetaMask or others is literally the way it will be done in the future. And so actually, I think there's a lot of interesting people building what I would call consumerization of blockchains. And that's on the very, very top level of the stack. The reality is that the base level layer one protocols, think literally blockchains, are completely unscalable. And there's a lot of people taking it on. I believe 2019 is going to be the year a lot of people launch their takes on scalability. None will work, in my opinion. And so I think it'll be interesting. We're still kind of building out that kind of primordial primitives, if you will, and that's kind of where we are.
Yeah, I think timing is so hard to get right from an investor perspective. And I think, you have to make, investments and you have to bet on people. And you can't think about the timing because 10 years from now, you're going to be wrong. And so I think you have to bet on, individuals that have, underlying theses where they're very mission driven and they care very much about something that as they're wading through the valley of disillusionment and despair, they keep going. And it's been really interesting because already you've seen in crypto, there's been a ton of tourists and pretenders that as soon as it got hard, they left. I'm glad about that. And I think what we're still waiting to see in a little bit in this space is some of the operators that built a lot of the foundational tech for the internet in the beginning to come in and just look. You don't have to be the first mover. You can do it better, and you can do it better based on experience. You can do it better based on cost of capital and a lot of things. And I think we're looking for that too.
I think what's really important also is what's been said earlier, to make it easier to interact with blockchains. At the end of the day, I think mass consumer adoption is going to happen because there's a significant add of value in whatever dApp will be launched, right? So if I'm using Uber or Airbnb or Instagram or something, I don't really care what the backbone technology is. I just care that it adds significant value to my everyday life. And as soon as we figure out how to make handling keys and private keys and key storage, for instance, way easier, it will be way easier for consumers to interact with that technology and people can just implement it.
So everyone in crypto is excited about institutional money coming in. That seems to be a topic of the media all the time. What insights can you guys give us about your LP's appetite for crypto? You're raising money from endowments and family offices and wealthy individuals. What is the excitement level on an institutional level for crypto right now?
I mean, our LPs don't care. They're family offices, they're endowments, they're insurance companies. And when we tell them, like we're making investments in crypto, I think they just look at it, they don't understand it. The same way they're not going to understand we're investing in cybersecurity. Same way we're trying to, reinvent how, biotherapeutics is done and, kind of water molecules or anything like this. They don't care. I mean, I think what they care about is, at the end of the day, are you actually providing a return over what they're going to get in a public market or some other instrument? And that's what we have to do. And so I don't think we try to educate them. I think we just try to discuss, here's our different kind of investment theses we have. Trust us. And I think right now, if you were listening to LPs, they wouldn't want us to put a single dollar in. And as soon as you start listening to your LPs, you might as well close up your venture shop.
Yep. Well said.
Sure. Happy to go. Some of our LPs, big endowments and foundations, I would say are kicking the tires a bit. So they want to meet a bunch of managers. They want to make sure they turn over stones and say, okay, we looked at this, and they have to get comfortable with that kind of risk profile. What's interesting is they're leaning on us actually very much to identify who are the interesting managers in the space, as opposed to looking at kind of a blanket. They're literally saying, okay, who do you think is really credible? Can you introduce us, talk to them? I don't think they've made an allocation to date. As far as I know, I think somebody wrote a check into placeholder in New York, but outside of that, that's about it. But I think there is interest, right? If you think of it, just the currency aspect alone, think of it as a uncorrelated, potentially high return asset. Any portfolio theory person would tell you that it might be interesting to add to a portfolio. I think the volatility scared a lot of people off, which is, to Jeff's point, great for us in terms of what it means for the entrepreneurial ecosystem. But I still think there's going to be continued interest to make small allocations in the space. And if you think of what LPs do, is they basically give us money to make allocation decisions both into investments ourselves and founders. And I think as time goes on, they'll probably even lean on us to do some judgment on that front. And so we've made actually our own investments in other crypto funds. So we've made a small allocation of our fund into a couple of different funds.
I think there's a spectrum. We have some LPs who understand the technology, are very excited about it, have either added or plan to add managers and funds that are specifically crypto-focused with various strategies. We have others that don't really understand it. There's strong skepticism because there was a period of time, which we're seeing sort of the remains of now, but where every other week they'd be pitched this new crypto fund by people that didn't have any sort of differentiation other than the category and the fact that it's liquid and using the public market prices in their pitch deck and whatnot. And so kind of a prolonged winter, if you will, feels very healthy from that perspective. And I think at the same time, they see the headlines, those LPs specifically, and the prices, and sort of wonder if it affects our business. And some do understand that it doesn't, and some ask questions because they're not really sure.
So it seems like every quarter there's a new large player that enters the crypto space. So, in January was JP Morgan announcing a JP Morgan coin for settlements. Facebook there's been a lot of press about Facebook launching their own protocol. Telegram will be launching their own protocol. So you have these mainstream apps. And I'd love to get your perspectives on what do you think this is doing for the space and how does it impact your early stage investing to have some of these larger players come in and validate the space?
I mean, to some extent, it legitimizes it. You have a bunch of people pushing in. And I think you've seen this mostly around stable coins and other things like that. And in fact, I would say over the next couple of years, you'll probably even see bigger things than corporations. Literally, nations create their own stable cryptocurrencies. As opposed to managing, their dollars out in the ecosystem. And so that to me adds even further legitimacy to the technology and kind of the impact it can have.
Yeah, I sort of view it like AOL a little bit in the sort of earlier days of the internet. It's kind of this walled garden, closed ecosystem, very little freedom for developers, but it got people used to using the internet and the possibilities, and that eventually goes away, which is what I suspect will happen here as well. But for the average person who doesn't really understand any of this and thinks maybe it's a Ponzi scheme, to have companies like that legitimize it and build in such a way that it's very easy for people to use, even if it doesn't harness the full potential or really any of the potential of a public blockchain.
Yeah, no, only other thing I would add is, thinking of people like Amazon and others who are starting to dabble in this space, Hyperledger and others, they're solving a lot of really interesting technical problems that other people are kind of working on. Let's think of this as things like blockchain explorers. So literally something that can look across blockchains and do it in a scalable, quick way. Compression of blockchains, a lot of interesting research from people with really deep pockets going into that. And so I think, if anything, there'll be some interesting research, like Bell Labs did. They spun out occasionally some pretty interesting stuff.
Yeah, I think that's the key point. You have big companies, big corporations, groups like Fidelity, J.P. Morgan. You can go down the list. They're all willing to try things, and this means alpha, beta customers. This means actually sometimes you even getting paid money for going and doing something, which is great for every startup company. So look, it's the same way when you were kind of building a virtual machine environment. You go find some early adopters. Some early adopters give you really strong feedback. You're getting feedback not only from a community of developers, you're getting feedback from somebody who's actually thinking about the applications and use cases. It's great. Whether they actually do anything with it or not, don't know. But I think right now what you're getting is at least a petting zoo is open for people to come in and say, hey, let's kind of play around with these things and see what they look like.
I'm sure you get this question a lot, so I apologize. But so far, the killer application for crypto has been speculation, value transfer, some remittances. What do you guys look for when you're looking for potential investments as some of the killer use cases for crypto over the next decade?
So I think the intersection of music and entertainment and media and value distribution, digital rights management, I think that's going to be a big one. I also think that there's a big implication for patents and what has been said earlier for open governments and smart contracts that are immediately enforceable on the government level and for remittance. I think those are great applications. I think it's going to take some time for this actually to become fruitful. I think now we pave the way with new technologies and protocols to make that happen. I think we're still 2 to 5 years out from that until we see mass adoption.
Yeah, I mean, we look at really basic things, in chargebacks and in cases where there's a lot of credit card processing. We get, far out things when we think about, the indestructible corporation where you actually don't know where your employees are or who they are. They're just kind of submitting things and everything like that. Continuous invoicing, continuous payroll. Look, so many businesses have been built in this world of get paid faster. Truly. And this will happen with continuous payroll, continuous invoicing. Obviously, the supply chain and the ability to kind of shift supply and demand curves, jump people in a queue, all these types of things in kind of real time makes a ton of sense. I believe that you should be able to bet, wager, hedge on everything. You go see a movie last night, you want to make a wager on whether you think there's an Academy Award. I'm going on vacation next week. What's the chance it rains and my vacation sucks, but I can sit there and just be collecting all sorts of things. I view this as really prominent around that too.
Yeah, I sort of think about it in the sense that wherever value can be created by trustlessly executing a computation that otherwise you'd be put at risk because of the super admin of Facebook servers, for example. And so where that is can be a wide variety of areas. Some examples would be in verifying that a digital service was delivered, so something like caching, transcoding, distribution, file storage, et cetera. It can also be in actually executing contracts that have to do with financial services. So lending, for example, if there's multiple intermediaries, purchasing some asset, programming that asset, et cetera. And yet beyond that, I think in the short term at least, that sort of trustless computation needs to be more valuable, or you need to be put at so much risk otherwise to kind of supersede all of the issues that exist today with public blockchains. In the future, that barrier may come down, but in the short term, those are the areas where I think that are possibilities for actual usage.
Yeah, and I would say every single fiduciary and record-keeping business is susceptible to disruption by blockchain. And you can think of that as things like financial instruments, equities, bonds, loans, hedging insurance contracts, property.
Title insurance.
Yeah, really almost anything. titles, other type of property things, truly ownership, art, collectibles, other things like that. And even voting, I would say, is another form of record keeping where you can actually have true understanding of votes and other things like that.
So how do you think about valuation as an early stage investor in crypto? There was something like $15 billion that went into the crypto space last year through ICOs and equity rounds. A lot of capital chasing a select number of projects. And we've seen the public crypto markets pull back 80% over the past year. Have we seen crypto valuations come back down to earth? How important is valuation to you guys when you're doing early stage investing?
The higher the better. I think that there's sort of a range at the seed stage in general. Obviously, there's no sort of fundamental valuations of early stage companies, and so the way that I think about it is there shouldn't be a premium because this company has to do with the blockchain at all, right? It should sort of be within that range. If it is a protocol, and we're thinking about investing in that, and we're thinking about the valuation in terms of the potential network value, I think it depends on the dynamics of how the protocol is designed and how that can accrue value, and thinking through, what are the assumptions we have to make to see, 10x multiple, 25x multiple on our investment, and if they're sort of wild assumptions, then that's not something we're interested in investing in.
Yeah, I think that valuations certainly have come down, and I think it's actually good that we're in a bear market right now because, as we said earlier, it really weeds out the bullshit, so to speak, and also people really focus on building stuff versus just making a quick flip. And I think a lot of investors, now have to deal with the problem that back in the day, end of 2017, beginning 2018, valuations were pretty inflated, and now those companies have to live up to their expectation, and some of them really don't. Another problem is obviously people raising, when Ether was very, very high, and then have to potentially return capital. I mean, we've seen this with bases. So whoever invested at a US dollar value in their SAFT earlier, they've had a good return, so to speak, because they get 90% of their USD value back. Whoever contributed Ether, took a big hit. So there's a big problem with valuations, but I think right now they're pretty low, and I think it's a good time to invest in the equity stage, seed and Series A.
Yeah, I would say macro sentiment is the buoy has gone down a little bit in terms of valuations, but still, I think compared to many of the other spaces that we look at Underscore, traditional SaaS and others, valuations are pretty healthy, and I think that comes in form of there have in history been few larger markets. I mean, take literally money. The market of money is probably one of the biggest market opportunities there will ever be. And if you have a good entrepreneur behind it, potentially the valuations can go very significantly high without any product. And I think there will be an interesting correction over the next 12 months as the world sort of digests a lot of the valuations that were kind of set and the watermarks that were set in kind of let's call it the fervor period.
Guess what? Private valuations are high everywhere. When you look at, just generally people getting paid, 10x, 15x ARR, next year's ARR on for SaaS products, security companies that trade at 20x and things like this. Look, it's high everywhere. And this is where, the economic rents go to the best projects. And I think same thing as crypto. Yes, valuations have come down. Yes, they're still high. And I think you have to just, valuation is something to be sensitive to. We care a lot more about alignment. And so like when we invest in founders in a crypto space, we want to have the same economic instrument. You want to make it equity? Fine. You want to make it, future tokens and network value? Fine. We don't really care. We just want to make sure that we're aligned with the people that we're building the business with. And we actually look at that a lot more than just the valuation aspect of it. Because, look, valuation is temporary, control is forever.
So in the question about use cases, we talked a little bit about removing escrow agents and title insurance, and there's a lot of financial use cases for crypto. As you guys think about the financial system, what do you think? How will the financial system look different a decade from now if crypto does what we think it can do? Sorry, Josh, you're always going first.
Yeah, I think a decade from now, at least here in the U.S., the crypto protocols or applications that people are interacting with will look similarly to some of the alternative sort of fintech products today where there's real usage, but it hasn't totally disrupted the system, like Lending Club or some of the direct consumer insurance startups or mortgages, et cetera. I think it'll take a longer period than just 10 years to see the entire system looking very different. I think there'll be progress in terms of certain forward-thinking organizations and banks implementing some of these products or interacting with them. I think globally you'll see more people store wealth in cryptocurrency than their sort of paper fiat, especially in countries where there's sort of hyperinflation and uncertainty, and they can't buy USD, for example, certainly not get it out of the country.
I think it's still going to take some time until we see an absolute cashless society. And I think one of the probably quickest changes we will see in the next decade is going to be a liquid market with, in the security token space, for instance, or smart contracts that distribute bond dividends, tokenized bonds. I think also settlements. That's something where we see a quick uptake of implementation. The question is just how quickly everyone is going to adopt it. And I think in terms of cashless societies and multiple currencies at the same time, I think we're still pretty far away from that.
I think it's a pretty big question, Zach, but the way I think about it and my mental framework for this is the following. If you think of before even internet, right, you used to go to the bank and they would tell you what your balance is, right? Internet allowed you to connect the information on top of that. So we connected information. As we go into the next blockchain layers, programmatic money, I believe you'll see the collapse of both valued information and the value of that information. And so what that means to me is something like the following of, now that I can see my balance on my bank's website, it's kind of a number and it goes back to a database somewhere. I think in future version that number is somewhere on a blockchain, and in fact I might even be able to hold custody of those assets as opposed to the bank, and including that I can potentially earn returns on that in a way that the bank does through doing things like lending or other things like that. And so kind of the macro view is that we connected information. Now I think you'll start to see value being connected to that information. And another simple example that I always like is imagine you're streaming a YouTube video. You could literally be paying micro slivers for that video. And that honestly is not possible without microtransactions and things like blockchains. And that to me is exactly the exciting, interesting part of collapsing the information layer of an internet and the value layer that's with it.
Look, I think 10 years is not far enough. Kurzweil's S-curves of acceleration and innovation do not apply to large financial institutions. Think about how long you've had your banking app and how bad it is still after 5 to 7 years. They're terrible at marketing. They're terrible at kind of thinking about things. I think the first is going to go to where the pain points are the greatest. You talk, developing markets, wherever it's hyperinflation, things like this. I think a lot of machine-to-machine communication will be completely opaque, to a consumer and a user and things like this with, kind of business transfers and stuff like this. I think it's going to take a long time, and they kind of want it to take a long time before you really see, kind of the financial institutions and the financial systems really start to change in a way that will be necessary for society to take steps.
We talked a little bit about timing. We talked a little bit about business models. What are you guys seeing in terms of the quality of teams that are entering the crypto space?
I think the quality of teams right now is probably higher than it was end of 2017, just because, the bear market, it's, a lot of people that didn't really know how to execute and aren't really smart or, weren't really educated enough at that time to really make a difference. We're just weeded out of the scene. But right now, everyone who kept being excited, kept educating themselves, and is still excited about the space, now actually has the opportunity to go out, raise capital, and drive fundamental value.
Yeah, I would agree with that. I think that the quality of the teams is continually increasing, especially now that There's no more free money being given out, which always attracts sort of everybody, and just by nature of that, obviously some percentage of them are not going to be of the highest quality, but it's going to be harder, and you're going to have to build a real business and think about how you actually get to the end user and the problems that you're solving, all the things that you would sort of think are intuitive, and you also don't see people who come out of other companies or academia that want to monetize either their research or things that they've worked on previously because they see other people doing it and getting very, very rich very, very quickly without having to put in a decade's worth of work that it takes to build a startup.
Yeah, I would say the caliber of people going into the space is really, really high, actually. I think there's truly some of the best technologists I've met in my career moving into this space. And what's better is they actually, with all of the data they've collected over the last year or 2 years, they are making more informed decisions on where to place their entrepreneurial chips on the problems they want to solve. And that, to me, kind of, again, buoys the quality a bit higher.
Yeah, same. I think you're going to hear from Alex from there, later, and the same guys that figure out how to shard MySQL, are thinking about how you shard the blockchain. I think, Lance and Matt and Leonid came out of Ping Identity, and they applied a lot of their same learning to building Hashgraph. You see this absolutely happening. I think the one caveat I'd say is sometimes we get caught in the theoretical, and we have people that are building a lot of things and building it for just their sake, and they're sitting there and they're thinking about things in theory. Get something fucking out there. Have somebody test it. Put your leg out there. Really take a stance on some of this. And I think that this is necessary because I think there's way too many projects. They're still in stealth mode. We're thinking this. Get out there, do something, engage the community with what you're doing, and really show yourself.
Last question. What advice would you guys have to our audience in terms of either being new investors in the space or being entrepreneurs in the space or joining projects? What guidance would you give them, people coming into the crypto space?
Yeah, I guess it's sort of a marathon, not a sprint. These things don't happen overnight. I would say, one of the mistakes that I made early on in my career was thinking that when you would be with a company and they were doing something that was so clearly the future and would happen and be inevitable, and the technology was here, and so it seemed to me like you invest that, and sort of that's how the market unfolds. That's not really how the world works. There is sort of path dependence that goes into these things. There is a period of time, and you do need a path to those things being in the hands of any people and those things actually happening in the real world.
I would say don't let yourself distract from the public sentiment and perception and the public price of Bitcoin, Ethereum, and so on and so forth. There's so many naysayers. But the technology is game-changing, and if you're in the space to build something, I think it's a great time. If you're in the space to invest early stage, public prices don't matter and shouldn't matter at all.
Only advice I would have for somebody kind of pushing in is to find somebody who's truly, truly unbelievable to follow. And so by that I mean, if you looked at a guy like Vitalik in the Ethereum early days, he's just an unbelievable person, and they kind of have this, I would call it the disciples, the people who are close to that kind of thought leader. And so if I was looking to join a particular project, I would see who is that caliber of person, and those are probably the most interesting ones. And even if that project doesn't necessarily work out, I think there'll be some very interesting ones that come from being in that group.
Just be mission driven and care about what you're building. Don't worry about the external sentiment. Don't be checking what the Bitcoin price is on a daily basis. Just find your nucleus of the thing that you really care about that's going to change and have an impact on something that you feel passionately about, and just don't deviate. And that's the same advice whether you're in crypto, you're doing any sort of just kind of technology project. These are hard, and they should be hard. And so find something that you're just going to unwavering on, be intrepid, and just focus like hell.
Yeah, well said. Well, Jeff, Richard, Milan, and Josh, thank you so much. And hopefully, if you guys want to ask any more questions, you can grab them after this. But thank you for listening.
Thank you.